We've been doing a blog series on financial biases based on the book Managing Behavior to Make Better Investment Decisions by Michael Pompian. Essentially, there are two kinds of biases: cognitive or thinking biases and emotional biases. These are tricks that the mind plays on itself to arrive at a conclusion that's not accurate, or at least not well thought out, and may well cause you financial harm, either in the shorter or the longer term. So cognitive or thinking biases come from the tendency to cling irrationally or illogically to one's own beliefs or how you process information. Investors may continue to hold on to a belief because of your confidence in yourself or your own ideas or abilities, or conversely, how you might process information, and that can be illogical or irrational in the financial decision-making process. So here's an example. Investors often distinguish between returns derived from the income or those derived from capital appreciation. People often feel the need to preserve principal, so they focus on the idea of spending income that the principal generates. Does this sound like anyone you know? The distinction between the source of your return, capital appreciation or income, is known as a mental accounting bias. As a result, investors often chase income streams as opposed to thinking about total return, that is, the growth of principal and the income. Investors with mental accounting biases treat one sum of money differently from another equal-sized sum based on which mental account the money is assigned to. This, of course, contradicts rational economic thought because money is inherently interchangeable. It's a fungible good, as they say. Mental accounts are based on arbitrary classifications. For example, the source of the money, whether or not your money came from a salary or an inheritance or gambling. Oftentimes people say, well, I inherited that money, I have to take good care of it. Or conversely, I won that money gambling. Easy come, easy go. Let's risk it. Or in our previous example, appreciation or income off the principal. Or on the other side, so we just talked about sources. What about the uses of money? Many times people have mental accounting for necessities versus leisure activities. Now that makes some sense because you have to pay the utilities and you have to buy gas in your car and you don't have to take the trip. But I would encourage you to look at how you mentally account for your money buckets and see if you too might suffer from some form of mental accounting bias.